Graphic, and Graphic Sports. Download your Graphic News Plus now and choose your preferred package daily, weekly, monthly, and annually, and access free news on various interest areas as well. Visit us on graphic.com.gh for further information. Graphic News Plus, connecting people through news. Have you thought of having access to your news at any time and anywhere? Graphic Communication is giving you the opportunity to have news not only in hard copy but also in a digital form. Yes, you can have access to news at all times and even before they reach the newsstands. Simply download the Graphic News Plus from Google Play Store on your Android and App Store on your iOS device and get your digital news from your favorite daily graphic, Graphic Business, The Mirror, Graphic Showbiz, Junior Graphic, and Graphic Sports. Download your Graphic News Plus now and choose your preferred package daily, weekly, monthly, and annually, and access free news on various interest areas as well. Visit us on graphic.com.gh for further information. Graphic News Plus, connecting people through news. Have you thought of having access to your news at any time and anywhere? Graphic Communication is giving you the opportunity to have news not only in hard copy but also in a digital form. Yes, you can have access to news at all times and even before they reach the newsstands. Simply download the Graphic News Plus from Google Play Store on your Android and App Store on your iOS device and get your digital news from your favorite daily graphic, Graphic Business, The Mirror, Graphic Showbiz, Junior Graphic, and Graphic Sports. Download your Graphic News Plus now and choose your preferred package daily, weekly, monthly, and annually, and access free news on various interest areas as well. Visit us on graphic.com.gh for further information. Graphic News Plus, connecting people through news. Have you thought of having access to your news at any time and anywhere? Graphic Communication is giving you the opportunity to have news not only in hard copy but also in a digital form. Yes, you can have access to news at all times and even before they reach the newsstands. Simply download the Graphic News Plus from Google Play Store on your Android and App Store on your iOS device and get your digital news from your favorite daily graphic, Graphic Business, The Mirror, Graphic Showbiz, Junior Graphic, and Graphic Sports. Download your...
Hello viewers, welcome to Graphic Talks 360. My name is Theophilus Yati, the editor of Graphic Business. This morning we are discussing the performance of the banking sector for the first half of the year. You are welcome and thank you for joining us. And we are also privileged to have the Governor of the Bank of Ghana, Dr. Ernest Addison, as our special guest. He needs no special introduction. Dr. Addison is also the chairman of the bank's Monetary Policy Committee. And we believe that we will have a very interesting and insightful conversation. We will discuss the COVID and its impact on the economy and also the central bank's response strategy. We'll also look at the Bank of Ghana's inflation targeting mechanism, and we'll look at our banking sector's ability to withstand the fallout. I believe that viewers would have a wonderful time with us this morning, and the discussion will be very, very interesting. I can see that Dr. Addison is ready, and sir, it's our privilege to host you this morning. Good morning. Good, sir. So my question first is, what is your appraisal of the size and the impact of the COVID-19 shock on the Ghanaian economy?
Well, just to say that, as you're aware, the COVID-19 pandemic is a global pandemic. This is unprecedented. It's not like anything that we have seen before. At the global level, this is a shock that is worse than what we are told happened in the 1930s. So this is something that we haven't seen in recent memory. In terms of the impact on Ghana, I think we would need to have some more observations to really understand the full impact of the pandemic. In Ghana, we have had some very bad economic history. If you remember, prior to the structural adjustment program in 1986, 1987, the Ghanaian economy was really very bad, almost stagnated. And I don't think we are there yet. The initial economic indicators that we have looked at for the first quarter of this year, some of these indicators came in relatively strongly. If you look at the exports of gold, even the exports of cocoa has been relatively strong. On the other hand, oil exports have been significantly impacted because oil prices have declined sharply. So we do have some strong points and some relatively weak points. If you look at private sector's contribution to social security, you also get a sense of the impact on employment back in Ghana. And we are projecting that we would see GDP growth decline, from an original estimation of over 7% to 2%. So it's a significant revision for the outlook on growth. Now, in terms of employment, some of the information that we seem to be getting, especially for businesses that are in the tourism and hospitality management services and educational sectors, these have been impacted significantly. Some workers have been laid off. In other cases, workers have been sent on paid leave in order to manage, the impact of the COVID. So yes, the impact for 2020 will be significant. We know that depending on how the disease progresses, that would also change the forecast. And it's very fluid. And this is something that is changing all the time.
Okay, sir. So, since this is the biggest shock we've seen since depression times, as a central banker, how do you feel being in charge of monetary policy implementation now? How is the feeling like?
Let me say that this is very challenging because in Ghana in particular, over the past 3 years, we have tried to, stabilize the economy, and we have made a lot of progress. 3 years ago in 2017, the Ghanaian economy was growing at a very slow rate, almost 3%. Inflation was high, over 25%. The exchange rate was very unstable because we did not have a lot of reserves. And the Bank of Ghana and the government had worked very hard over the past 3 years to correct these developments. You will see that we have had a fiscal consolidation. The government has had to spend less by trying to raise revenue and prioritize its expenditures. The central bank has had to tighten monetary policy, and in a sense, all of that has helped in bringing inflation down. We have been able to build more reserves, and we are seeing, more stable conditions, and then higher growth. Last year, 2019, the growth rate was above 7%.
Okay.
So now we are seeing a development which could derail all the progress that we have made. You can see inflation, which was within our target. That is around our target band of 8 plus or minus 2%, has recently gone up to 10.6%. Yeah. And then you can also see that the budget deficit is threatening to be wider than originally planned. So this really complicates, policy, and it calls for very serious, navigation of the challenge in order to ensure that, we don't undermine all the gains that we have made over the past 3 years.
Okay. Let me also find out from you, how would you rate the banking sector how would you rate the banking sector's pre-pandemic strength, especially on the back of the cleanup exercise?
Yes, Theophilus, it's as if we knew something was in the pipeline and in a sense, we prepared for it. Then and again, if you look at what has happened over the past 3 years, we have tried to strengthen the financial sector by getting rid of insolvent and weak institutions. We got rid of 9 very weak banks that were not even able to meet their depositor withdrawals.
Okay.
So over the past 3 years, we have raised the capital requirement for banks. The banks have more capital. The minimum capital requirement 3 years ago was at 120 million. We raised that to 400 million. And you will see that since then, all the banks are better capitalized. As of the end of last year, we are seeing that the banks are growing more strongly. Their asset growth has increased. The banks are also beginning to give more credit. The total advances from the banks has increased. In addition to that, I think the confidence in the banking system has improved. So one of the observations is also an increase in deposits to the banking system. And you know what has happened. A lot of the weaker, smaller institutions have seen deposits go down, and people have, diverted these deposits into the institutions that they can see are stronger and better managed. So it's going to be advantage of the banks that are perceived to be stronger. So in a sense, the banking system is entering this COVID environment on a stronger foot.
Okay.
And they are much better capitalized and they are more liquid.
Okay.
Now, given what has happened, as I told you earlier on, a lot of companies have had to close down, especially those in the hospitality, tourism, educational sectors. Some of these companies have exposures to the banks. They have loans that they have taken from the banks. As you're aware, we have had to ask the banks to give them moratorium. Okay. In other words, they are allowed for 6 months up to a year to hold on to the servicing of their loans. This means that the banks are not going to be receiving any income on these assets. At the same time, some of these institutions also have their workers having loans from the banks. At the same time, the facilities that have been extended to workers have also, in a sense, been restructured. So all of that has an impact on the profitability of banks. We have seen that the operational cost for banks since the COVID environment increased has gone up. Okay. At the same time, the net interest income for banks has gone down. So we are beginning to see that impact of a weaker revenue flows, weaker profitability, higher costs. But fortunately, the banks are well capitalized and should be able to weather these COVID-19 effects, provided it does not become, a protracted problem which is not resolved within the next 6 months.
Okay, so that sums up the performance for the first half. So what does the second half of the year looks like?
Well, we are confident. First, let me start with the inflation outlook. Okay. We are confident from the Bank of Ghana in terms of the policies that we are putting into place, that the inflation would come back into our target level. So we'll see the headline inflation go down from 10.6 back into the target range of 8 to 10%. In that sense, we should also expect that the broader economy should begin to recover from what we have seen in the first half of the year. Okay. And if that happens, we should expect that some of the weakening indicators that we have seen, such as the net interest of banks and the profitability of banks, should begin to improve in the second half of the year.
Okay. Thank you, sir. the BOG has adopted some measures to support the financial sector, the banking sector, and the economy. How are the sector and the economy responding to these measures?
Well, I think that the economy is responding very well. I mean, the first policy decision that we took was to lower the policy rate, if you remember, from 16% to 14.5%.
Yeah.
Now, the COVID pandemic is an economic shock.
Yes.
An economic shock which impacts on aggregate demand. Therefore, there is not much activity. There is not much activity by way of demand in the economy.
Yes, sir.
By lowering the policy rate, you are able to stimulate a little bit more demand because the price, the interest rate on investments, for example, goes down. So lowering the policy rate ideally should lead to lower lending rates in the economy, and that should help to stimulate growth.
Okay.
So we are seeing that the banks have also, in a sense, passed this on to their lending rates. We have seen nearly 200 basis points reduction in the lending rates by banks. As I said, we had also asked the banks to give a moratorium to businesses that have found themselves impacted negatively by the COVID pandemic. So we have seen more than 3,000 customers of banks who have benefited from a restructuring of their loans. At the same time as the other policy that the bank implemented, which is the reduction in the reserve requirement for banks. We reduced the primary reserve requirement from 10% to 8%. This translates into about 2 billion CDs of money, which the banks are free to use to augment the lending that they are providing to the private sector. And I think that has also helped. In addition to that, the Bank of Ghana reduced the capital conservation buffer for banks by 1.5%. And then we have also taken the precaution of preventing banks from distributing profits for 2019 in order to have the buffers to withstand the shocks that are coming out of the COVID-19. So the impact, I believe, is positive. We have also worked with the banks to ensure that critical sectors such as pharmaceuticals and the hospitality services can have access to credit of almost 3 billion CDs.
So, Dr. Addison, are these measures adequate, or we should expect additional measures from the central bank?
I think you're asking a very good question. The biggest impact of this COVID pandemic has been on the budget. That is the government's revenues and expenditure plan. At the same time that the government has had lower revenues coming in 2020, the government has also had to spend more to protect households, spend more to protect businesses, providing more resources for our health facilities. All of that costs money. And therefore, you would see that initially the government had benefited from resources from the International Monetary Fund and other international agencies. But as time went on, we have seen that the financing need has gone up. So the question is, we need to understand whether in the outlook, depending on how this pandemic pans out, whether its impact on government financing need would be positive. In other words, put continuous pressure on the government's financing need. We are hoping that we have seen the worst. And if that is the case, some of us are of the opinion that the measures that have been put into place for now are about adequate.
Okay.
But as you know, the bank's monetary policy committee meets every 2 months. Our next meeting would be in July. In the July meeting, we would have had more data. We would have had data up to the end of June. So we would have a better sense of what is going on the ground. And if there is a need to, put into place additional measures, the policy committee will definitely do that.
Okay. Thank you very much, sir. We've talked about inflation. We've talked about central bank financing government's budget. Let me find out from you, especially on inflation. Would you say that the pandemic has influenced the monetary policy response in terms of the mandate of the central banks, inflation targeting mechanism?
Well, Theophilus, yes. As you know, the mandate of the central bank is to focus on price stability, but we do obviously keep an eye on growth as well. Okay. Now, what we find ourselves, the situation that we find ourselves in at the moment is the rate of inflation, which has jumped to 10.6%, which is outside the central bank's target range. Okay. Now, the question is, if the central bank wants to bring this rate of inflation back into the target range, we should be thinking of tightening policy. Okay. By tightening policy. But given the current circumstances and the weaknesses in growth, the central bank would adopt a wait and see attitude to see how the headline inflation, progresses over the next quarter. Okay. And as I said earlier on, we believe that inflation would come back into our target range before the end of the year, and there might not be a need to tighten policy in the second half of the year.
Okay. I'm asking this question because some economists have said that it will take about 3 years. And in fact, even the finance minister, when he appeared before Parliament this year, he said that it will take the economy 3 years to recover. So as we implement fiscal policy, we need the support of monetary policy. So that's why I'm really interested in whether we can fall within the target within the shortest possible time.
Well, Theophilus, I think that's a good observation. First and foremost, if you look at the developments around the world, the impact of COVID has not been inflationary. In most countries, because of the sharp fall in growth and the sharp fall in demand, prices have also generally fallen as a result of the COVID. Yeah. So the development in Ghana is unique, where we see price rising because of, the shutdowns. And we see it as a short-term response because of the lockdown. There was a lot of pressure on markets. If you look at the data more closely, in the case of Ghana, this was driven by food prices. Yeah. So the rush to buy food for the lockdown led to this increase in food prices that we are seeing in Ghana. And therefore, we do not expect that inflation would be outside our target band over a long period. Okay. However, the issue of how long this weakness would go on is still debatable. There is a view that we should, at least if you look at the World Economic Outlook that was published a few days ago, we are expecting global growth to resume in 2021. Obviously, to get back to the pre-COVID growth rates would take some time. Okay. but I'm not sure if we would see, say, a negative growth for 3 consecutive years. That would be the worst possible outcome.
Okay, so Dr. Addison, let me find out from you, has this pandemic challenged policy implementation and policy effectiveness? If yes, in what ways?
Well, I think this is a big question for the fiscal authorities. That's where the biggest challenge is, because if you have a decision to do all that you can to ensure that the COVID does not destroy lives, it also means that you must have a lot of resources in order to undertake the expenditures that would require, us to deliver the type of, interventions that will protect everybody, and everybody would be employed, and then you would have a smaller impact on livelihoods. So this is the balancing act that policymakers are currently faced with. And you have to do this in such a way that you do not set yourself to undermine all the gains that we have made over the past 3 years. I'm referring to the budget deficit.
Yeah.
That in addressing the COVID pandemic, we are seeing a very large budget deficit, which is projected to be above 7% in 2020. Remember that we have spent the last 3 years to try to reduce this budget deficit to below 5%. 5%, yes, sir. And therefore, we have to be careful that in trying to address this pandemic, we also don't undermine all the gains that we have done over the past 3 years. I think that tells you the nature of the challenge that policymakers are facing. Now, if you look at the case of the Bank of Ghana, we have had to finance the budget to the tune of 5 billion. Yeah. Under the Bank of Ghana law, we have an emergency clause, Section 30 of the Bank of Ghana law, allows the central bank, in the case of an emergency, to provide resources to the budget. Now, the law says that the Minister of Finance, the Governor of the Central Bank, and the Controller and Accountant General must meet to decide on how much resources the government would need to manage the emergency. Okay. So we have met, as the tripartite met, we assessed the financing need for the budget. And as you know, we estimated possible support of 10 billion cedis, and we have already disbursed the first tranche of that resource. Yeah. Obviously, this is an intervention that we cannot repeat, because we have tried to minimize central bank financing of the budget in order to minimize its impact in terms of inflation and depreciation of the currency and all of that. So we think that the past 3 years policies that we have implemented has given us the policy space to be able to provide the support to the government at this time. Okay. If you look at the balance sheets of the central bank is in a much better position. It has more reserves. It was able to make fairly good profits in 2019. Yeah. And that puts us in the position to be able to provide some support to the budget at this critical time. Yeah. However, if the situation does not improve and it becomes protracted, the central bank would not be able to provide the additional resources that will be needed if we are not to undermine all the gains that we have made over the last 3 years.
Okay. So is that to say that the 10 billion support you are offering is adequate?
That is to start. Remember, we also said that this pandemic, there's so much uncertainty surrounding it. But now we are hoping that in the second half of the year, we should see things improving.
Okay.
So given that outlook, this current is adequate.
Okay. 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 You just talked about the performance of the Bank of Ghana, the financial performance in the last financial year, that you made some profit. What were the factors that accounted for that good performance?
Well, a lot of that also had to do with the implementation of IFRS 9, which requires that the bank should take account of expected credit losses.
Okay.
And in 2017 and 2018, if you will recollect, one of the problems that we had in the banking system was the fact that the Bank of Ghana had given out a lot of liquidity support to UT, Capital Bank, Unibank, Royal Bank. All of those weak banks were depending on the central bank for liquidity in order to stay afloat. Now, in the process, they were not able to pay back those resources. And therefore, the external auditors of the bank had to impair. Okay. They had to impair all of those loans that the central bank had given out in 2017 and 2018. But by 2019, there were no impairments of that nature on the balance sheet of the central bank. So that helped a great deal. And then you also look at it, the operational cost of the central bank has been properly managed also over the last 3 years.
Okay. Okay. Thank you very much. Now we are back to banking. That's my favorite area. Is the banking sector's resilience to the crisis going to endure? And what do you think? Why do you think so too? I mean, if it will endure.
Well, as you know, the banking sector, you have to look at the behavior of non-performing loans in the banking system, which were almost 20%, over 20% just 3 years ago. And we have seen NPL ratios come down significantly to around 14% or so by the end of 2019. Okay. Now, due to what I described earlier in terms of the loan restructuring and the inability of firms and workers to service their loans, we are beginning to see a creep up of non-performing loans in the banking system again. Okay. But we do not anticipate that this will be sustained. Okay. And all of this depends on the outlook for growth. Okay. Whether what we are seeing would be resolved in a year or two, or whether what we are seeing will take 3 years to resolve. Okay. Now, if you're looking at the 3-year scenario, then we are looking at some significant challenges in the outlook, because we cannot afford to have these, deterioration in the bank, in the books of the banks over the next 3 years. Okay. And we are hopeful that this pandemic would probably be resolved by next year, although the levels of growth may not come back to the pre-COVID levels. But we are expecting that at least in 2021 we would see maybe a growth of 5%.
You mean 5% this year? Pardon me.
No. Sorry. 2021.
2021. Oh, okay. Oh, okay.
Yeah, 2021.
Okay.
And if we do see a recovery of growth in 2021, obviously the outlook for the banks should be much better. Yes. But if unfortunately we see a decline in growth in 2020 as well as 2021, that obviously would represent a major challenge, not only for the banks in Ghana, but broadly for the government as well, broadly for the entire macro economy. You just have to look at our debt to GDP ratios in Ghana. The sustainability of debt in Ghana depends very much on whether the economy is growing or not. We have to grow this economy out of debt. Remember, debt GDP ratio, the denominator is the GDP, and you have a certain level of debt. Now, if the denominator is not growing,
expanding,
then the debt burden is carried at a very high level over a longer period of time. But if you are able to grow the denominator, then the debt burden would also go down. And therefore, a scenario which projects 3 years, deterioration in growth, has major implications, not only for banks, but also for the economy as a whole.
Okay. Thank you very much, sir. If you look at the central bank's report, the banking sector report for the first quarter, this was issued in May, you realize that the banks did not give as much loans, did not give much credit as they should have. And I believe it was partly because of COVID and also because economic activity itself has slowed down. Looking at the second half of the year, should we be concerned in terms of
I don't think that we should be too concerned at that. The banks also have to be careful so that they do not create more non-performing loans in the system. And therefore, it's important that they are giving out what we call good credits. These are credits to projects that are viable so that the banks can recover. Remember, this is exactly the problem that brought us to the cleanup of the banking system.
Yes, sir.
That you had depositors that placed their monies in banks that had licenses from the Bank of Ghana to take out depositors' resources, and those resources were not used judiciously. Some of those resources were used to finance projects of the shareholders and directors. And then when the depositors needed their funds, they could not get access to them. So at the back of the operations of banks are the resources of depositors. So we should also be careful to ensure that the banks give out these credits judiciously, ensure that these are projects that are viable, for which the borrowers would be able to pay back. Otherwise, they create a problem for the system as a whole.
With your kind permission, sir, I want to find out about the city's performance. It's a bit baffling, and I need to be educated. I'm sure not just me, but my viewers need to be educated a bit. With your kind permission, why is the city still falling when we have less imports and forest-based transactions?
Well, Theophilus, the CDs reflects many factors.
Okay, sir.
It reflects the development in our domestic economy.
Okay, sir.
It reflects developments in the global economy.
Okay, sir.
And if you look at what has happened worldwide, we have seen capital leave jurisdictions such as ours into the advanced economies. Now, when that happens, it has an impact on the availability of dollars in Ghana, and then that can trigger a depreciation of the currency. Now, if you look at 2020, this year, 2020, we started the year on a very strong note with very strong reserves. And then also we went very early to the capital market to issue a $3 billion bond. So by January and February, the city was appreciating. If you look at the data very carefully, the Ghana city appreciated for nearly 2 months of 2020
Yeah.
until the global shock
Pandemic,
came
yeah.
in terms of this COVID pandemic. And then we saw capital flowing out of countries like ours.
Okay.
And therefore, the CD also started losing value.
Okay.
And therefore, if you look at the year-to-date statistics, you will see that the CD this year has depreciated by less than 2%.
Yes, sir.
Because there had been quite a significant appreciation of the currency in the first 2 months of the year.
Okay. Okay.
Is your question answered? I'm not sure. The look on your face, what I can make out of it.
That's fine. That's fine. That's fine. That's fine. That's fine.
Yeah.
That's very fine. On a lighter note, before we sign off, on a lighter note, what keeps you awake in the night? Looking at all that is happening, especially with the shock, this global shock.
No, I'm worried about the budget deficit.
Okay.
And I'm worried about a budget deficit that might not be sustainable in the medium term. And I think we need to do some work in trying to revisit the mobilization of revenue from domestic resources and use that to manage the growing budget deficit. As I said, we cannot allow the COVID-19 pandemic to undermine all the gains that we have made over the past 3 years.
Okay. So are you happy with the fiscal policy response?
I am happy with the fiscal policy response. As I said, this is not unique to Ghana. This is the globally. You see that all countries have had, to utilize all their tools, including the tools that have been used in Ghana. But we should also be, forward-looking in terms of what this would mean for 2021 and then 2022.
Okay. Thank you so much. Before we sign off finally, any final thoughts from you?
Well, let me congratulate Graphic for your 70th anniversary.
Thank you very much.
We have been following the celebrations very strongly from here. And to congratulate you for all the work that you have done over the past 70 years. The TUC boss said that he is impressed by the neutrality of Graphic. I saw that Alassane Andani also mentioned that Graphic, in a sense, measures the mood of the country. And I agree that your headlines, in a sense, gives us a good sense of the priorities of Ghana at any point in time. So congratulations to the good work that you are doing.
Thank you very much, Dr. Addison. We are very grateful for your time. We believe our viewers and our audience out there has been educated, and a lot more understanding is now out there. Thank you so much. Please enjoy the rest of your day, and we wish you all the best, and the Central Bank all the best as you fight hard to ensure that we don't feel the pain of COVID-19. Thank you so much for your time, sir.
Thank you very much, Theophilus.
Bye.
And all the best.
Thank you,
It's
sir.
been a pleasure.
Bye.
Bye-bye.
Viewers, we just had a conversation with the governor of the Central Bank, Dr. Ernest Addison. We talked a lot about the development in the banking industry and also in the economic space as a whole. I believe that you have been educated. I believe that you have been better informed now. I believe that you now appreciate the financial developments in the country now. Thank you so much for being with us on Graphic Talks 360. See you soon, and bye.